Good day traders, this is Stefanos on behalf of tixee, and in today's video we'll be giving a look back of the market for the week of the 2nd until the 6th of May. Before we dive into the webinar, one of the key highlights of the week was the aftermath of Uber's and Shopify's earnings, as well as the Fed's interest rate hike. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So kicking things off with stocks, the names in focus for the past week, as we said, were Uber and Shopify. If we look at Uber first, I'm just going to pull up the chart in the meantime. And I'll set it, it's going to be the weekly, or I'll keep it to the daily time frame so we can focus on the earnings report. So Uber gapped down by almost 5%, which was on this candlestick right here, after reporting its figures on the 4th of May before the market opened. Now the company missed the EPS expectation by a staggering 1,042%. And even though it did top the revenue estimates, the stock price continued its decline for the rest of the week, as we can see with these candlesticks, as it continued falling and it shed a further 7%. So this was basically the day that the earnings were released. And we can see, as we said, they were released in the pre-market hours, so the impact was to be seen on the same day. And with the open, prices just gapped down from the previous day, as we said, by 5%. They did recover towards the end of the day, but from the following day and until the very end of the week, we can see that it just continued declining further, now trading close to $26. The next one was Shopify. With Shopify, it missed both the EPS as well as the revenue estimates. The EPS, it missed by as much as 67% after they reported their figures ahead of the open on the 5th of May. And with the open on the 5th, it dropped by more than 16%, again, as we can see with the declines and the gap downs right here, and continued the decline into Friday after it dropped a further 8.5%. So looking at both of the stocks, this one specifically, Uber and Shopify, we can pretty much see the impact that the earnings report had on both of the stocks, since they missed some key expectations, and which is why they continued declining both after the reports were released and again on the following days until the very end of the week. Now looking at Forex, the US dollar, just like last week, it was the main currency to hold yet again, as we had the interest rate hike over the course of last week, which boosted the US dollar, as well as the positive NFP report on Friday to finish the week off. If we combine that with a number of weak data events from the rest of the world's major economies, such as the retail sales report from the Eurozone, we can pretty much see why the FX markets moved the way they did last week. So if we look at the pound dollar first, you will see exactly what I'm talking about. I'll switch this on this time to the weekly time frame. So yeah, looking at the pound dollar first, the currency pair dropped by almost 2%, or 254 pips by the end of this week, which is again this weekly candlestick right here, since I switched the time frame from daily to weekly. So yeah, dropped by almost 2%, which is again 254 pips, and this, as we can see from the chart also, it was its third consecutive week in the red, and it's down now by more than 5%, or 709 pips over the course of the last 3 weeks. And even if we look at the euro dollar, we'll see a similar picture, even though this week it wasn't as bad. So we can see it's barely moved this week. It's pretty much a dodgy candlestick where it's down by almost 0.03%, so it's pretty much negligible. But if we look overall, the price moving over the course of the last 3 weeks, we can see that it's also quite firmly down. Again, not as much as the pound dollar, but it's down by 3%, or 328 pips if we look at these 3 weeks combined. And then lastly, we'll have a look at the commodities. Gold is gonna be first. Just like with the two major currencies we analyzed, gold posted its third consecutive week in the red amid the strengthening US dollar and obviously the inverse relationship that they have. The yellow metal fell by almost 1% this week, or $14.50. The interest rate hike also did not play in its favor, since a currency that is yield-bearing may be seen more attractive to investors than non-yielding assets, such as gold in this case. We can pretty much see the decline after we reached the highs up here, which was close to the $2,000 mark. We just started selling off, which on the technical side, you could see this asset double top. So we could see the next key area of interest going to be around these levels, unless it manages to hold the levels here, which is the $1,900 mark. So yeah, the next one will be all the way down to the 1800, which is again another round number. And if we look at oil, we're gonna see that oil, it had a little bit of a different move in the sense that it actually posted a weekly gain. But we can see why, because we had the report this week that the EU, they have finally decided to move forward with the total ban of Russian oil imports by the end of this year, which can only mean a further tightening of supplies, and hence the prices are being driven higher. And also, if we look on the technical side again, last week, if we remember, we analyzed the daily time frame, and we'd be able to see basically how all the oil prices that were stuck in the consolidation phase, which is now breaking towards the upper end and retesting these levels right up here, which is again, it's above the $100 mark, firmly above the $100 mark. So it could very well retest the highs here before it potentially falls back down towards the middle of the consolidation phase. Or if we get any further news with regards to tightening supplies, we could even see it retest the highs all the way up here, which is the 124 mark. So yeah, by the end of the week, the prices, they finished the week up by 6.11%, or $6.36. And now they're trading, as we said, firmly above the $100 mark, as it's close to the 110 mark. And yep, there you have it. As far as the look back and review of this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.